Hello everyone. So initially I was bearish about 10 minutes before market close. I bought into some puts, but then I remembered that we have CPI data coming out tomorrow morning and I completely forgot. So I closed those puts out real quick. So in today's video, it's a bit unfortunate because I was feeling a bit bearish, but since CPI data is coming out, it's sort of a 50-50. So I'm going to do my best to explain what my outlook is on the market heading into tomorrow. All right. So we're going to take a look at the SP 500, the NASDAQ, the Russell, the dollar, the bonds, the yields, large tech stocks, and of course the VIX. All right, so without further ado, let's get started with the video. So number one, we have to take a look at the VIX. All right, so the VIX is inverse to the market. When the VIX does well, the market does not. So the VIX currently looks bullish. We're about to cross we just crossed above on the MACD. So 1 to 2 days after we cross above, it is generally neutral or bullish on the MACD. So if it's neutral or bullish on the VIX, that means it's neutral or bearish for the overall market. So that was one of my theses for wanting to be bearish. We're holding the downtrend line really well on the VIX. This looks like a solid just 50% retracement of this candle, and it could bounce. So the VIX looks bullish. All right, so next let's go ahead and take a look at the dollar. All right, so the dollar also is generally inverse to the overall market. All right, so if the dollar is rising, generally that is bearish for the market. The dollar does look a bit bearish here, right? But we're at this major level of support here. And this is essentially where the dollar wicked. Okay, so I really, especially with the momentum of the MACD starting to move upwards as well, I really liked like a setup like this can easily bounce a little bit. I wasn't expecting it to make a high, right? I wasn't really caring too much about that. I just thought that we were going to hold this hold this level of support, right? Bounce off of it, paint a bit of a green candle on the dollar, which would cause the market to fall and the puts to do well. So that's what I'm expecting to happen on the dollar. But especially if we end up making this high and make another high, that is a really good opportunity to short on the dollar, and essentially then it would be a better time to go long on the SPY. So the dollar, I really thought it was going to bounce, all in all, to sum it all up. Okay, so but it doesn't look as bullish as the VIX. All right, so there's that for the dollar and the VIX. The VIX looks way more bullish than the dollar does by far. Okay, next let's go ahead and take a look at the yields. So the yields are crossing above as well on the MACD. You can see that they're crossing right here, and similar situations of the VIX. When we have a crossover on the MACD, the next 2 days are either neutral or bullish. So because the yields have an inverse relationship to the market, with a bullish move on the yields, that is generally bearish for the stock market. Okay, and another thing, just without even having to look at the MACD, when you get a wick like this, right, generally we get a bit of a bounce to fill this wick up a bit. All right, so if that were to happen tomorrow, that would be bearish for the market. So there were a lot of different reasons that I was pretty bearish that I wanted to get into puts. And then CPI data kind of took that out of the equation. So this is the 10-year yield. Looks like it could get a bit of a bounce tomorrow, which would be bearish for the market. Let's take a look at the 5-year yield. The 5-year yield, not as bullish, but it's still, this sort of setup does generally fill a bit of the wick as well. Anyway, let's go ahead and take a look at the 20-year yield. 20-year yield definitely doesn't look as good because we're at a level of resistance, but in general, like, it's holding this 23.6% fib of this candle here, and it is generally, when the 23.6% fib holds, it's really good for another upside move. And similar situation on the MACD, we are crossing above on the MACD, so the 20-year yield looks bullish, right? But we're failing at levels of resistance. But this would be the setup. In the next few days, this would be the setup where we get a bounce above this level of resistance. As you can see, we've been wicking at this level of resistance 5 times now. 1, 2, 3, 4, and then today's the 5th. So obviously, but in general, this is it's a strong setup. The fact that it's holding the 22.6, we did not break below at all today. We didn't break below the 38.2, which is really bullish generally. All right, so there's that for the 20. Let's take a look at the 30. Same concept, except we're holding above the, take a look at this like this. We're holding the, wow, the 38.2. So when we're holding the 38.2%, that is also similar situation to the 22.6. Anything above the 38.2 is bullish. And same concept here on the 30, we have not even crossed above yet on the MACD. So that still shows that there's upside potential for tomorrow. And if there's upside potential for tomorrow on the yields, then that is bearish for the market. And yeah, but you can't really do much about that right at the moment because CPI data is coming out tomorrow. So it's unfortunate. But there's that for the dollar, the VIX, and the yields. In general, these things do look, as a whole, it does look like it's a bit bearish for the market. All right, next, let's go ahead and take a look at the large tech stocks. So let's just start off with Amazon. In general, guys, all of these would just be phenomenal, like high quality shorting opportunities. So number one, because you could see this high from back in August, it acted as a level of resistance through September. And then it acted as a level of resistance a few days ago and then on Friday. So you could clearly see that this 143.63 level is a level of resistance. Going short at a level of resistance is always a high quality trade setup. And you could also see with the MACD, we are about to cross below on the MACD. So that is bearish, right? So, oh man, like there was so many good opportunities. There were so many different signs to be bearish. But you know, it is what it is. So Amazon definitely is at a level of resistance, could be falling lower. Let's take a look at Microsoft. Has an inside red candle basically, which is you could basically short all of these stocks with a stop loss right before Friday's highs, and that was my plan for the SPY. I wanted to short for this reason, but it is what it is. Google, similar concept, was not breaking above Friday's high. Tesla did pretty well, but it still did not break above the major resistance levels from last week. But overall, this and Meta are a bit of like the most bullish at the moment. Meta held 326, made an upward wick similar to the yields. So I'm expecting this to bounce a bit, unless CPI data wasn't coming out tomorrow. I would expect it to bounce a bit and fill a bit, and then it would make a decision. But Tesla and Meta look pretty decent. Let's take a look at Netflix, similar concept to Microsoft, similar concept to Amazon and Google. So a lot of these companies just were failing at Friday's highs, and it would have been a spectacular opportunity to short. But it is what it is. We can't really do much about that. Let's take a look at Nvidia and AMD. Same concept. So Nvidia is not a spectacularly bullish move, but there is a lot more room to the upside according to the Bollinger Bands and according to this MACD indicator just flying upwards. But then when you take a look at AMD, another red candle, you could easily go short with a stop loss right above Friday's high, and this would be a decent short. So the overall tech stocks, they're showing good shorting opportunities. They're showing extension to the upside and good opportunities risk reward wise to be short. But can't really do much about that because CPI data. So there's that for the large tech stocks. Let's go ahead and take a look at the IWM, the NASDAQ, and then the SPY. All right, so the IWM clearly making a bear flag. This is the most weak and you can see that it's holding below the 38.2% fib. And generally, a retest of the 38.2% fib, which just so happens to be coinciding with this prior level perfectly, would be a good shorting opportunity. The other thing is that the MACD indicator just crossed below as well. So today and tomorrow should be neutral or bearish. And as you can see today, we are up 0.04%. So it's neutral. But overall, the IWM, this needs to break above this 50% fib zone, and then we can start some strength. But it really needs to break above the 172 level. Essentially, bear flags that remain above, that break above the 6.8% fib, have a 70% chance of continuing upwards. So that's basically what we need to see. But overall, this is still downward bearish momentum. We could still continue falling lower, especially with the yields rising. So let's see how that turns out. The IWM definitely looks bearish, but we are technically, at a level of support. Let's see if we can make another leg up to the 50% fib on the IWM. But this MACD indicator does not lie, and this lack of buying pressure above 170 also does not lie. So, price action wise, it's not really showing that much strength. So there's that. Let's go ahead and take a look at the NASDAQ. So the NASDAQ looks very similar to all of the different stocks that I was basically showing. I essentially wanted to go short with a high over here, with stop loss at the highs from yesterday. And, it would have been a very high quality trade setup. But essentially, we just have to see how that ends up going for CPI data tomorrow at 8:30. And then let's take a look at the SPY. This essentially was the same concept. We wicked above yesterday's high, basically just shorting this alongside the weakness that is there in the IWM and the NASDAQ. Would have been a beautiful little opportunity for a retest to 438. That would have been my target. And especially another reason why I wanted to go short was, guys, like, we're very close to levels of resistance. 443, 444 are the levels of resistance. How much more room do we have to the upside? Not much, right? So going long here is not really optimal. So we're gonna have to see whether we have a big swing in either direction for CPI tomorrow. But in general, if CPI was not going to occur tomorrow, I would be bearish overnight. And I hope you guys learned my thought process with everything, and I hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff, and I will see you guys tomorrow. Thank you.